Okay, so I've started recording. Yeah, so as I was saying last week, we ended up at our balance sheet. We were able to complete our fixed assets, and then for the current assets, it was left with the bank balances. And I said that for the bank balances, we have to do our cash flow statement. The cash flow statement shows us the movement of money in and out of the company. So when we do our cash flow statement, we will know how much money is left at the end of each month. And that money which is left at the end of each month is what we are going to put inside our balance sheet. So that's why at the moment our balance sheet has zero for bank. So when we complete our cash flow statement, whatever balances we have at the ending of the period, we will put it there for the cash or bank balance in our balance sheet. So you remember I told you that for the balance sheets, we have two numbers that must balance, or two numbers that must be the same. That's the total assets and then the total capital and the liabilities. I hope you guys still remember the elements of financial statements: assets, liabilities, capital, income, and then expenses. Do you remember? Priscilla, I'm on you today. Priscilla, do you remember the elements of financial statements? Okay, Abubakar, do you want to talk?
No, please. No.
Okay. Priscilla,
Yes, please.
Priscilla, last week I told you that this week it's unfortunate that the other Priscilla didn't join today, so you take all the hits.
Mhm.
Do you remember the elements of financial statements?
Um, the elements.
Well, I just
Okay, and we have the statement of the financial position.
Mhm.
We have the profit and loss account. That's also income
Your
statement.
line is breaking. Oh, can you make it stable a bit?
Sorry. We have the income
Oh, no.
statement,
Mm-hmm.
statement of financial position, and then the
Mm-hmm.
cash flow statement.
Okay. What you just mentioned are the actual financial statements. What I was acting are the elements. You see that in each of the financial statements, we have some elements or we have some items that go into them. For example, when you take the profit and loss, you know that profit and loss, you find your sales or your revenue there, and you also find your costs there. Those things are your elements. Priscilla, do you get it?
Yes.
So the elements, we have five elements. We have the income or revenue. Then we have expenses. Expenses is the second one. We have assets, we have liabilities, and then we have capital. Do you remember these five things?
Yes.
So those are what we call the elements. So with
Mhm.
the various types of financial statements, these are the things you find in the financial statements. Okay.
Okay.
Ehen.
Okay.
So in the balance sheet, give me two elements that you find in the balance sheet.
Um, the assets and
Ehen.
liabilities,
Okay, then you add the
and
third
then
one.
capital.
Okay, yes, that's fine. Ehen. But when you go to the income statement, you are not going to find assets there. You are not going to find liabilities there. You won't see any capital there. It is purely your income and then your expenses. And the difference between those two is your profit or your loss. Okay. So when you come to the balance sheet, as Priscilla said, we have three elements there. And we have something called the accounting equation, which is like your assets should be equal to your capital plus your liabilities. And there's a reason for that, but I won't explain that because we'll be switching from financial modeling to accounting. So just take it like that. that there's an accounting equation that goes by your total assets, current and fixed assets, or current and then non-current assets, should be equal to your capital and then your liabilities put together. So if you can see from what we've done so far that we have our total assets, it's now left with, in fact, we don't even have our total assets because the bank and then the cash balance is missing assets now. So, but when we put that there, the next thing will be our capital and then liabilities. So last week we did our liabilities. We put the liabilities there. I think the only liabilities there was the current liabilities. Who remembers what the current liabilities is in the question? Let me call someone else. Mami Bedu was the first to join today. Mami Bedu, can you identify the liability in our question? Abubakar, do you want to talk? We are testing your mic. Okay, Isabella.
Yeah, our creditors.
Our creditors, right?
Yes, yes.
Okay, yeah. Creditors, also known as street payables. That's the people that we have bought from, but then we are yet to pay. We have bought from them. They have supplied us with whatever they have to supply, but we are yet to pay. They are our creditors, and then we are yet to pay them. So they are liabilities. Okay. So aside them, we don't have any other liability. We don't have any loan, or we don't have other forms of liabilities are loans, or maybe expenses that we are yet to pay. For example, if we've not yet paid for our rent, it's a liability. If we've not yet paid for electricity or water, it's also a liability. So anything that you have received the service from someone but you are yet to pay it, it's a liability. Okay, so the next step should be our capital. Okay. Unfortunately, this question didn't give us our capital. It didn't give us the value for capital, but there's a way to calculate it. And doing that will be going so much into accounting. I don't want us to do that. So I'm going to update our practice question to include the figure for capital. Do you get it? How many of you do accounting here? Okay, Abubakar. Abubakar, do you know how to calculate the capital from this question? Do you know how you'd have calculated it? Abubakar, how would you have calculated it?
Are we calculating the equity, or you mean
Yeah,
like
equity.
that?
You see, the question didn't give us equity or capital. Okay. So I'm asking that right now we are preparing a balance sheet and I want to know what the capital is. So how would you have arrived at the capital?
The profit.
What?
Hello, profit.
No.
The retained earnings, the profit. Hello.
Okay, yeah, you said retained earnings profits. Continue. I can hear you. Hey, what's happening? Okay, Mami Bedu, you've raised your hand. Please go ahead and speak. Can you hear me? Abubakar, your line is breaking, so let someone else speak.
Yeah.
Mami, you can go ahead. Okay, no worries. So the capital is 530. Okay. So I don't want us to go deep into how we got to the 530 and all that because that's too much accounting work for us. So the capital is 530. For those of you who know how to do the computations, when you do it, you should arrive at 530. If you don't arrive at 530, you can see me later on. Okay. So let's continue. Yeah, okay, Charles.
Please, a quick one. I want to know if we know of asset to be capital plus liability.
Yes, yes, yes.
So if we do the cross multiplication, or sorry, the computation, the liability will become negative and subtracted from the asset. So capital will be equal to asset minus liability.
Exactly. But the question is, which asset will you be? Will you be using the opening asset or the closing assets? Will you be using the asset that's at 31st December or the ones after 1st January?
So we will be, so we are going to use the closing one.
Closing for December or January?
Closing for January.
No, it should be closing for December.
Okay.
These ones, the ones in the question. So you use the 23,000, the bank balance here, the 55,000. You get it.
Okay.
That's the one you would have used. So as you were saying, it's going to be your assets minus your liabilities. Okay. And after that, you take away your retained earnings. But I don't want us to go into that for the sake of those who are not doing accounting. Yeah, Charles. Yeah.
So the figures in the question, not the footnotes. The figures in the question there are the opening.
Yes. They are the opening balances. Yeah, you see.
So we are going to use the open balances to compute for the statement of financial position.
No, we'll use the opening balances to compute for the capital. So it's like the opening capital. You get it?
Okay.
And right now, the question is that, or the issue is that the question hasn't given us what the capital figure is. If you read the question, there's no amount for capital. Okay. So it means you have to calculate it yourself. And over here, you need some accounting knowledge to be able to do those calculations. And I don't want us to go through all that. Our time is really limited. So I'm just giving you the figure straight away, which is 530. So you can do the computations by yourself. You arrive at 530,000 cedis.
Okay, sir.
So let's go back to the financial statement and then input the 5,000 there. 530,000, sorry. Okay, so after the capital should be the retained earnings. So the retained earnings here should be the one in the question. Okay, which is 120,000. And after that, we have to add the profit or loss that we made in that particular month. So in January, we had a loss of 10,900. So instead of typing everything there, I'll just reference that cell. So I'll pick it up here, cell B21. Okay. So let me format my numbers here. So your opening capital plus your retained earnings plus any profit or loss you made in that period will give you your total equity. Who knows the formatting to apply to this cell to indicate that is the summation of the three numbers above? Charles.
Hello, sir. Please come again, sir.
So I'm saying that this 639,100 is a summation of the numbers above. So what formatting do you suggest that I apply to it to indicate that it's indeed a summation of the numbers above? Do you get the question?
So you have to underline it.
Okay. Underline which one? Is it the 10,900 or the 639,000?
So the 10,000. The 10,000.
Okay, yeah. So I either underline that one. Okay, it's not underlined because we don't use underline. Underline is
yes,
this.
please. You introduce
Okay.
the borderline.
So this is underlined. Then let me introduce the borderline for you to see the difference. Do you see the difference
Okay,
now?
sir. Yes, please.
So this has been underlined together with the border. So let me take away the underline. So it's either you underline this or hey, you see I'm also saying underline. You put a
Sorry,
bottom
sir.
border. Yeah,
You
you
bring
put a
the
bottom
bottom
border
border.
there. Yeah, or you put a top border on top of the 639,000.
Yes, please.
Okay. So we have our total equity, we have total liabilities. Let's add the two. So this plus this 6. Okay. So the formula, no, this figure, this 689,100 is supposed to be the same as 613. It's supposed to be the same as the total assets, but it's currently not the same because we've not yet found the closing balances for our bank and cash. Okay. So when we find the closing balance and we put it there, the total asset should be the same as this. Okay. So, and this is going to be the
Hello,
final
sir.
step. Yeah, go ahead.
So if we know the total assets and we know the total equity and liability,
Yes,
so we
I know what you're
subtract
come to
it, the
see.
balance. That was the shortcut.
Yeah, it's a shortcut, but yes, what you're saying is right. But to ensure that we are correct, let's do the cash flow statement. Whatever we get, if we put it there and then it's the same, it means we are totally correct.
Okay, sir.
You get it.
Okay,
What you're
sir.
saying right now is correct. But if we make a mistake, we won't know that we've made a mistake.
Yes, please. Yes, please. It's true.
So yeah, so let's wait and then do the cash flow. We put it there and then we see
Okay,
what
sir.
happens. Yeah. So that's what I'm saying. This is going to be the final step. So I'll bolden it and then I'll apply the top border and then the double bottom border like this. Okay, so we've done that for January. Let's go to the next 2 months. So retained earnings for February. Who knows what that amount will be? The retained earnings. So I don't have any shortcuts for this one. Retained earnings for February. First of all, do you know what retained earnings is? Isabella, are you around?
Yes, please.
Okay. I want Isabella to talk in. Then the next question will go to Priscilla again. Isabella, please go ahead.
Please, retained earnings are profit that the business has made but has decided to retain it into the business for
Okay. Okay.
additional expansion of the business.
Yeah, correct. So retained earnings is basically the profits that the company has made. But instead of spending that profits or using it to buy any other thing, they keep it inside the business. And even that's the reason why the retained earnings comes under the capital or the equity section. Because if you make profits and you don't spend it, it goes back to add up to the capital you have. Okay. And so in January, the retained earnings was 120,000. So it means from the previous month or the previous years, they've accumulated profits up to 120,000. But in that current year, they made a loss. So that loss is going to affect the retained earnings, true or false?
True, sir.
Okay. So it means that the retained earnings for February is going to be the retained earnings in January plus whatever profit or loss that was made in that same month of January. But because it's a loss, it's going to be a subtraction. And because my profit is already negative, that's why I'm using the addition sign over here. If I use minus, it's going to add up. Okay. So let's go ahead. Then let's bring the profit or loss for February, which is a loss of 250,000 and 250. So let me drag my total equity formula to the right side to match. Then I'll drag the total equity and liabilities to match. Okay. Let me grab this one too. Okay. Retained earnings in March is also going to be the retained earnings in February plus the profit or loss in February. Like this. Any question on this side? Any question?
Can you
Which
go
side
back?
do you want to go over?
Where you got the retained earnings? Yeah, on the
Okay.
109.
The 109. Okay. Yeah. So the 109, as I said, is the retained earnings for February. And that retained earnings is what we already have. Before February, we had retained earnings of 120,000 in January, but January we made a loss of 10,900. So it has reduced that retained earnings. So if you check my formula, it is the 120,000 plus. It is plus because my profit is already negative. Okay, so that's why I'm using plus. So the 109,100 is just the retained earnings plus the profit or loss. And the same also applies to March 2. The retained earnings in February plus the profit or loss in February. Bless, are you okay?
Yes, please. Thank you.
Welcome. Okay. So we can start with the cash flow statement for now. Any questions so far on the income statement and then the balance sheet? Okay. So I'm going to copy the first 3 rows here. Then I'll bring it down. Okay, let's go back to the format for cash flow statements. Can you see the format? So as I said, cash flow statement is basically showing us the movement of money within the company, money that comes in and the money that comes out. So from the format over here, the cash receipts are the money that come in. So when you make sales, you get money, but it's not just any type of sales. It should be cash sales, and because you can decide to sell and then your customers won't pay immediately. In that case, you've made sales, but they've not paid, so there's no cash movement. So cash sales is under the cash receipts. Then the sale of assets. If you have a car or a building and decide to sell it, you're going to get money in return. So in fact, this should also be cash sales of assets too, because you can decide to sell an asset and they still won't pay immediately. Okay. So those two will fall under our cash inflows or cash receipts. Then we have purchases too under the cash payments or the cash outflows. Purchases too should also be cash purchases because you can decide to buy and then you won't pay immediately. So in fact, anything here at all should involve the movement of cash. Okay. Anything, whether it's an expense or it's a sale, it should involve the movement of cash. So admin expenses, other expenses, operating expenses, that will give you a total payment. So the total receipt is the same as total cash inflows. And the total payment is total cash outflows. So the net is the difference between the two. The net cash flow we have over here is the difference between the cash inflows and then the cash outflows. So if you find the net, what will then be the balance? The balance is going to be the balance before all these inflows and outflows happened, plus the net that has currently happened in that period. That is going to give you a closing balance. So this closing balance is the net plus the opening balance. Okay, so opening balance is whatever balance we had before the period happened. The net is the difference between the outflow and then the inflow. So when you add that difference to the balance you already had, you get your closing balance. And that closing balance is what we are going to input into our balance sheet. Is that okay?
Yes.
Priscilla, are you available?
Yes.
Okay, nice. So you can continue, right?
Yes.
Okay. So let's start with our cash receipts. Let's go to the question and then see if we can identify our cash sales. Okay. So, has anyone seen any cash sales in the question? Priscilla,
Hi.
you see cash sales in the question?
I'm looking to. Please give me a second.
Okay. Or you don't have the question open then. Charles, do you have any shortcuts for us for the cash sales?
So I'm going through.
Go through and let's see. Charles, any response for us?
Sir, I want to try something.
Mhm.
We have the sale for the month of December to be 40,000.
Mm-hmm. Mm-hmm. Mm-hmm.
And we have the debtors figure to as well. So
Your line is breaking down.
sell
Okay, so you're
and
basically saying that we can use the sales and the debtors figure to find the cash flow, right?
we have a total of 40,000 and the credit has to be 28,000. Then the rest, if we subtract the 28,000 from the 40,000, the rest will be the cash.
Hold on. Can you hear me?
Yes, you can hear me.
Okay, so Charles, you weren't very
Yes,
clear,
please.
and I don't know what exactly you said, but I think you were saying that we can use the debtors and then the sales to be able to calculate the cash sales. Am I right?
Yes, please.
But I also had some creditors there, or you didn't say anything about creditors.
No, please. No, please.
Oh, okay. Then that's fine. So I'm going to paste the format there and then I'll explain it to you. Okay. Okay, can you see my screen?
Yes, please.
Okay, so you can see that I have opening debtors, the sales, and then the closing debtors. What this means is that for the month of January, or even before January, we had a number of people who were owing us, okay? And then in that same month, we sold to more people. And then at the end of January 2, we had a new amount of people owing us. So this is what you're going to use to calculate the cash sales. Charles, is this in line with what you were saying?
Yes, please.
Mhm. So let's input the figures there. So what's the opening debtors for January? That should be the closing for December. Charles, please give me the figure.
So please, I'm trying to open the question on my machine and it's
Okay.
slow.
Okay.
That's why.
Then, Priscilla, do you have the question? Do you have the question?
Yes.
Okay. Give me
The
the
closing debtors for December is 23,000.
latest figure for ending of. Okay.
It's 23,000.
Sales in January is 23,000.
No,
Is that what you're saying?
the closing debtors. Closing debtors is 23,000. And the
Same
sales is
23,000 like this.
400,000.
This is 400.
Yes.
So like this, right?
Yes.
Let me check.
Yes.
Let me check what you have done. Okay. No, closing for January isn't 23,000.
Yes, it's 23,000.
Closing for January, are you sure?
Closing for January is not 23,000.
So what is it?
Please hold on. I'm going to help you.
It's even showing on the screen now.
I was on my question side. It's 26,450.
Okay. Yeah, you're right.
Yeah.
So we did that calculation over here.
Mm.
So I'll just reference the cell. I'm not going to type 26,450. I'll reference it like this. Okay. So what we are saying is that our cash received is 449,450. And it's like this. Coming. Oh, can you give us the formula? Cash received.
Sir, please come again.
The formula for the cash received, the cash that was received from our sales.
So it will be the opening debtors plus the sales minus the closing debtors.
Exactly. You all understand why this is the cash received. Okay, let me give an example here. So assuming initially people owed us 8,000, maybe beginning of December, people owed us 80,000. And then now at the end of December, the amount that people owe us is now 30,000. That's 30,300, 30,000. How much do you think we have received from them within December? Do you get my question? Priscilla.
Please come again.
Okay, so I'm saying that thing. Let me shift this to the right. So before December, or as at 1st December, the amount or the total amount of what people owed us is 80,000. And then ending of December, that amount is now 30,000. How much money do you think we have received from the people who have owed us in December? Or how much cash do you think we have received from them? 50,000, right? Yeah, so that 50,000 is cash that has come in. The 50,000 is cash that has come in. So that's the first part of our formula here. That's why we subtracted the closing debtors. So the closing debtors is like at the end of December, these are the people owing us. But before These were the people owing us. But here's the case, sales also comes in. Okay. So if at the beginning of the period, people were owing us 23,000, and then in that period, we sold 400,000. And at the end, we have 26,450 now owing us. We'll add the sales to the opening and then subtract the closing. That is going to represent the cash that has come in for us within the period. It's like you get it.
Hello, hello, sir.
Yeah.
So what
Yeah.
of like with the closing debtors? What of if let's say like at the beginning of let's say a month we have an opening data, and then at the end to like another extra data has added to it.
Mhm.
So that one like going to be confusing, like since like it's another data which has added to the opening data. So wouldn't it be an addition of the debt?
Okay, so
Now,
let's use figures to try and explain what you're saying here. So give you example again with figures. So let's say opening. Give us a value for your debtors.
let's say 500 cedis.
500. Okay. So
Yeah.
now closing.
So at the end of year closing, like an extra this thing has added an extra 300 cedis.
So like, okay, so that's 800. What this means is that it's possible those who owed us 500 have not even paid us, and then we have sold extra 300 that are yet to pay us as well.
Okay.
Do you get it?
Oh yeah.
Even in this example, like the current question we are solving, you see that the opening is 23, but the closing is 26. The closing is small.
Yeah.
But per our calculations, we have received 396. It means within that same month, we sold 400 more in addition to the 23 that's already owing us. But at the end, we have 26,450. So it means that it's likely all the 23,000 have paid, and then part of the 400 we sold to has paid. You get it?
Yes.
So that's the logic behind the calculation of the cash sales or the cash received. Okay, so let's fill up for the rest of the month. So opening for February. Priscilla, what's going to be the opening for February?
It's going to be 26,450.
Okay, exactly. That's going to be the closing for January. So let me reference that cell. And the same is going to apply for March. So March is going to be the closing for February. Okay, so let me pick up the closing for February. It's 30,417 like this. Then the sales in February. What's the sales in February? Okay, sales in February is showing at the top here. So I'll just pick it up like this. Then I'll pick up sales in March too. Then closing. Okay, closing for March is also here. So we now know the cash that we received from the sales we made within those 3 months. So let's send it to the cash flow statement. So I'll reference those cells like this. And I'll drag it to the end. I don't think there's any other thing that caused an inflow of cash in the equation. Is there any other thing like that? Okay, we didn't sell any assets, right? Priscilla, did we sell any assets? Okay, so I don't think there's yeah.
There is something in the footnote I want to. It says it's projected to grow by 50% from December until March. Does that one have effect on the cash flow?
So that's the sales that we used over here when we're calculating.
Oh, okay.
Yeah, it is sales, but we don't know whether it is cash sales or credit sales. So
Oh,
that's
okay,
sales
okay,
and that's what is showing over here.
okay, sir.
Yeah. Okay. So aside that, I don't think there's any other inflow of cash. So let's go to the cash outflows. Cash outflows. So let's start with the purchases. Okay, cash purchases. Do you have any cash purchases in the question? Okay. You see the expected purchases. Footnote item number 3. That's where we have the purchases. So in the case of the sales too, you don't know whether this is cash or credit. So we have to use that same format to be able to identify which one is cash, which ones we actually paid in cash. You get it?
Yes, please.
Okay. So let's go back and work that one out. So it's going to be the same logic as the cash sales. So we'll take our opening creditors and purchases. Using.
Hello.
Yeah, let's.
Please, I'm not getting your values for the cash receipt. I had the first one, but the second and the third one, I'm not getting it.
Okay. So what formula did you use for the second one?
Like the one, the what's the name? Opening data
Okay,
plus
okay,
sales
yeah.
minus.
Yeah, you are right. You're right. So you can see that the first one, the formula is different from the second and third. So to correct that, I'll just drag it to the end like this. We have the same figures now.
Yes, please.
So does it mean Bless is the only one working along with me?
I've gotten the correct one.
Okay. And you didn't alert me that I was wrong.
Sir, I just got it and I
Hey.
notified you.
Okay. Okay. Thank you.
You're welcome.
Okay. So Isabella, give me the figures for opening creditors for January.
Say, if you say me, I was behind a bit. So
Oh, this one, it doesn't matter whether you are behind or in front too. It should be in the question.
okay, I'm listening. What did you say?
So I'm saying that, so you don't even know the question. Yeah, you started coming up with excuses.
Because I was a bit lost, but when I figured my way out, then
Okay, okay. So I'm saying that we want to find the cash purchases, and it's going to be the same approach we did for the cash sales, the opening creditors, closing creditors, and then the purchases that happen within that month. So now I just want you to give me the figures, Keke. So just look through the question and then in general, which one is going to be the opening creditors?
in January, opening creditors. That's the 48,000.
Okay, all right. That's the closing for December. So
Yes, please.
48,000. Then the purchases we made in January is that should be in the footnotes.
The purchases. It's
Mm-hmm.
370.
Hello, sir.
Yeah, Charles.
Please, the 48,000. I think it's for the operating expenses.
Yeah, sure.
Let me. Oh, okay.
No,
Let me put lines there so that you won't be confused. Oh, not to do it one by one. Okay, let me put all borders there. Rather. Okay. Yeah, this should be better now. So Isabella, let's continue.
Okay,
So-
so it's 347,000.
Okay. Then the closing for January is
50,000.
50. Okay. So it's going to be the same formula. The opening plus what we sold minus what is left at the end is the cash that has moved out. Okay. The opening plus what we bought minus what is left at the end is the cash that has moved out. So let me apply top and bottom borders to it. Let me drag it to the end. So the opening for February is going to be the closing for January in that order. Like this. Isabella, what's the purchases for February? Give me February and then March.
Purchases. Okay,
Mhm.
3,000.
Mhm.
398,750.
Okay. The closing for February.
46,000.
So purchases for March.
458,263.
So closing for March.
52,000.
Okay. And let me format my number as well. Are we all on the same page?
About to say.
You were the one giving us the figures, so we are waiting for you.
Okay.
You have 30 seconds
Sir,
more.
please, you can go on.
Okay.
Sir,
Yes,
hello,
Mr.
sir.
Charles. Yes, Charles.
Please, sir, there's something in the footnotes at the latter part of it. It says creditors value for the 3 months are expected to be as follows: the 50,000, 46,000, and 52,000. That one too, would it have effect in this one?
Oh, yes, so it already had effects. Can't you see
So
those
please,
figures?
can you go back to your workings?
Okay, this is my
So you
workings.
wrote 5,000.
Hey, what is it 50,000?
Yes, please.
Okay, it's 50,000. Are you sure another one gave me 5,000?
I doubt.
Okay. Charles, are you seeing them now?
Yes, please. I've seen if you included them.
Yes. So that's it. So now let's go and put that in our cash flow. So we just reference the cells and then we drag and shift to the right. So the other payments, we are going to assume that all the expenses were paid in cash. Okay. Usually when you incur expenses, the assumption is that you've paid for it in cash. If you've not paid that, usually the question will state that maybe electricity for the month of March is 60,000. Then it will tell you that only 60% of this 60,000 has been paid. But if it doesn't say anything like that, the assumption is that you've paid it. At least when you incur expenses, you have to pay. True or false? Or you guys don't pay for expenses, you buy on credit.
Sir, we pay.
Nowadays, when you go to the shops, it will tell you that no credit. So we can also safely assume that all our expenses are paid in cash. So let's look through and pick the expenses one by one. Should we add depreciation? Let me ask Priscilla. It's been a while. Isabella, Priscilla. Is Priscilla there?
I'm here.
Priscilla, should we add depreciation to our list of expenses? But do you even agree it's an expense in the first place?
Yes.
Okay, so should we add it to our cash flow?
I don't think we should add it.
Okay, you are correct. I won't ask you why, but you are correct.
Okay.
But because you spoke a lot about depreciation, so I don't want us to go back again. Okay, so closing inventory is not an expense, so we can ignore it. Purchases, we have already factored in purchases and our cash purchases, so we can ignore that one too. So the next one is operating expenses. So let's put that in the cash outflow. Operating expenses. So please give me the figures. Abubakar, you can speak.
Yeah. My question is with the calculation for sales cash, the cash sales, no, the sales for the January one, no, we used the previous month's on. Yeah.
Sales. Hey, who gave me that figure?
It should have been 460,000.
Isabella, you the one who gave me that figure.
So no, I give you the purchases fees.
So I don't give myself the poison. Okay, so the good thing is because we are solving it Excel, we can just go and rectify the error here. So this is the sales for January, 460,000. So it's going to update our cash received over here, and then it's going to update our cash flow to over here. Are we good to go?
Yes.
Okay. So Isabella, give us operating expenses. This one, everyone knows that the one giving it to me. So if it's wrong,
Okay, say operating expenses.
we've already done the calculation somewhere. So if you have your workings, you should be able to find it.
Okay, so I have it here.
Okay. So go ahead.
66,000.
Okay. So let me see. Okay, 66,000. What's the next?
72,600.
Okay.
And
So
79,860.
Okay, thank you.
You're welcome.
So, admin expenses. So that one is 25,000 each month. So no wahala over there. 25,000. I'll format it when we are done. You don't worry. So sales, we factored in sales already. Debtors, we factored that in. Creditors, we've done that. That should be the total for our cash payments. Okay, so total. What should be the next after this one? Priscilla, please check from the format and then tell us what's the next thing. Hey, Priscilla, are you there?
Yes,
Seven.
The what?
I'm checking. So we have the net cash flow.
Okay. So that should be cash receipts minus total cash outflows. Okay. Then we have opening balance, right? Opening balance, closing balance. First, give me the opening balance.
Please hold on.
The opening balance should be the cash or bank assets, 31st December.
The opening balance is 55,000.
Okay. So closing will be the opening plus the net. So now let me drag the formula for net cash flows to match like this. And then the opening for February is going to be the closing for January like this. And then same like this. Now I'm going to drag the formula for closing to the end. So we have our closing balances for the cash flow statement. So first of all, let's put it in our balance sheet to see if we did the right thing. So I'll go back to the balance sheet, and then in the row containing the bank or cash, I'm going to reference the cells that contain the closing balance from our cash flow statement. So like this. Okay, so do you see that the total assets is the same as the total equities and liabilities?
Yes.
Yes, sir.
Okay, so it shows we are right. So let's check for the other months too. So I'll drag this to the right like this. Okay. So I think all the total assets is equal to the total equities and liabilities. So let me show you another way that you can use to check. So let me call this balance sheet check. So I'm going to use a simple formula that will show true or false to let us know whether our balance sheet has actually balanced. Who knows what that formula will be? Isabella, do you know what the formula will be? I want to check. I want to input a formula that will tell me true if my total asset is equal to my total liabilities, or it will tell me false if my total asset is not equal to my total liabilities.
Sir, please, I've forgotten.
Oh, this one is not even a formula crowd. So you don't have to forget it. Okay, Charles, Abubakar, bless. Who can tell me what the formula is? I was about to say 10 cities at a time for the one to get it right, but even this one is too simple.
Sir, please come again with a question.
Because you've heard 10 cities at a time, you're asking me to come again with a question.
No, sir.
I'm saying that
I didn't get to the very part.
you weren't paying attention to hear 10 cities at a time.
No, please.
So I'm saying that you see, have you seen what I've highlighted now?
Yes, please.
Okay, so I just want to show true or false. So I want to show true if total equities and liabilities is the same as total assets. And I want to show false if they are not the same. In fact, I've even just got another way to do it. There's a short way and then there's a more complex way. Oh, no one. Okay, then I'll do it myself and get my 10 cities.
Please, is it the if function or?
You can use the if function. That's the complex way.
Okay.
Can you give us the formula? It's not that you just mention it though. You have to give us the formula too. Okay, let me do the thing
I
myself.
don't
So
remember. I don't remember.
okay, no problem. So this is the first way to do it. You just do this equal to. To input your formula of functions, you have to start with equal to. So equal to, then select the total assets like this. Then another equal to like this. You see how simple it is. So I just telling Excel that equal to B41 is equal to B52. It is true. It is true that B41 is equal to B52. So it has returned true. Let me intentionally change this to 700,000. It has changed to false. Let me do undo. So that's it. Just this simple thing. People don't want 10 cities. So I drag it to the end. So that's the first approach. The second approach is the complex one, where we will use the if formula. So you can do something like if a logical test. You guys know about the if formula?
Yes.
Okay. I think maybe our next meeting I have to focus more on the individual Excel formulas too as well. So if this, which is the total assets, is equal to total equities and liabilities, value if true. So if it is true, let me show yes. If it's not true, let me show no. If I want to, I'll show true or false, like I'm showing over here. You guys understand what the two formulas are doing? You guys understand what the two formulas are? Yeah. So the first one is just checking equal to this is equal to this. Yes, it is equal to that. So it's showing true in that sense. Okay, so have you also seen the differences between the way the text is being written? You see that one true is center aligned, but one is in the left. One is aligned to the left. Do you see that difference?
Yes, please.
Do you know why? Okay.
I think we've used this thing for the second one. But
Bless, your voice is low.
yeah, I'm saying that probably, can you hear me?
Yeah, I can hear you now.
Yeah, probably this second one we've used was a function directly from SZ. I'm inbuilt function. This one, like we use, what's the name? A normal equality. It's
Okay.
not an inbuilt function.
Let me show you something. I can still make this one to return the same thing. Have you seen it? Have you seen it still the same?
Yeah.
Yes.
So the difference is that okay, there's something called data types. We have strings or text. We have integers or whole numbers. And we have Boolean. String or text is I mean, you know strings or text already. Alphabets mixed with numbers and all that. Okay. Integers or whole numbers. It's like 1, 2, 3. You get it. And Excel has a way of aligning this type of data. You see that the text or the string is aligned to the left. Numbers are aligned to the right. And for Boolean, Boolean is just true or false. You get it? Charles,
Yes, sir.
do you understand what I've done?
Yes, please.
So basically, I'm saying that there are data types. So I'll use it to explain what I did over here. We have these three types of data. There are more actually, but let's just focus on these three for now. We have strings or text. So strings or text is like just alphabets. So anything at all, like A, B, 1, 2, 3, and special characters and all that. Something that strings or text are usually aligned to the left automatically by Excel, unless you go and change it manually. You can do it manually. Okay. Then integers or whole numbers, they are aligned to the right. And then we have something called Boolean. Boolean has just two, it's either true or false. Okay. Now let's go to the reason why initially my true or false was aligned to the left. What I did initially was that I added double quotation marks to the true. And in Excel, if you add double quotation marks to something, you are making the thing a string. You get it? So
Yes,
in
please.
this my if formula, this true over here is a string, and it's a string because of the double quotation marks that I added. That's why it aligned them to the left. You can see from the example over here that I'm saying that strings are aligned to the left. So that's why our strings were aligned to the left initially. But what I did to align it to the center automatically by Excel was to remove the double quotation marks. Okay. And that's how come it was aligned to the right. Now let me show you another difference. Let's say if the value is true, I want it to show 3 zeros like this, 1, 2, 3. See that these 3 zeros, they are integers, they are whole numbers, but they are aligned to the left. And we can all agree that it's only strings or text that are aligned to the left. Integers or whole numbers are aligned to the right. But in this case, our 000, which is an integer, is aligned to the left. The reason is that I've put those 3 zeros in double quotation marks over here. So Excel is seeing it as a string. Let's see what happens if I remove the quotation marks. You see that now it is aligning it to the right. Do you get it?
Yes, please, sir.
So at least we've learned something new today too. So yeah. So basically those are the two ways to actually check if our balance sheet is accurate. And we are doing, you see, sometimes because ours is a short balance sheet, we can just look at the two numbers at the same time and then just say that, okay, this is the same as this, so we are correct. But assuming we had more data, assuming our balance sheet was very longer, we can't just spot and then see that they are the same. We may have to add some formulas. So that's what we've done over here. And then we had two ways of doing that. A simple approach, which is equal to, then is this cell equal to this cell? If it is a cell, Excel will automatically display true. If it is not true to our Excel will show you false. Okay. And then if you don't want the short, yes.
So in real life, this is how businesses prepare their financial statement, comparing it to how what we learned in school, where it will be the transpose of this whole thing.
Oh yeah, in real life, this is how balance financial statements are prepared.
Okay, but in school they will make us use the transpose version of this.
Yeah. So is even in school you will start using this approach, but which level are you in at the moment?
I'm not going to 300.
So when you start 300, you start preparing it like this. It's not even the matter of real life, but then IFRS 1 talks about preparation and then presentation of financial statements. You've not treated that, right?
No, please.
And so as soon as you start with IFRS 1, this is how your financial statements will look like. You are no more going to be doing that kind of balance sheet where you have the working capital, net assets, then the finance by. No, you're not going to be preparing it like that.
That vertical thing.
You're not going to do that one.
Okay.
It doesn't mean it's wrong, but it's just a different approach. It's just a different approach. However, the standards or the IFRS 1, the accounting standards are telling us to use this approach. It's like, you see the way I'm calling it balance sheet over here. If you go to IFRS 1, it calls it statement of financial position. And it doesn't mean if you call it balance sheet, you are wrong. But if you go into like the standard, or let's say the accounting law, no, it is calling it statement of financial position. Although some of us know it as balance sheet. But by law, it is, or by accounting standards, it is statement of financial position.
Thank you.
Are
sir.
we okay? Oh,
Yes, please.
Hello, sir.
yeah,
Please, you said like the reason why we've used the check, what's the name? We are using the check is that the data is not it's not plenty.
Yeah.
And then like if let's say we are using the formula, are we saying that we've referenced for us to reference, we move to the cell. So even if the data is plenty, like for the referencing, you'll be moving to the cell that you reference to get the what's the name, the check. So by all means you know the distance already
Okay,
because
so
you're doing reference.
okay. So the reason I'm saying that if the data is plenty, it might be difficult for us to spot. So let's say this amount is something like, let me type 689,100.03. With this one, I can easily spot the difference. Do you get me? But
Yes.
sometimes the numbers can look very similar. Maybe it can be 698 and 100. Or see that you can easily or mistakenly see these two values are the same. You get me?
Yeah, I get it.
You can easily see them as the same. And you be like, oh, 698, 689, like 100. And then if your data is a lot, if you don't take care, you might just assume that it's the same. But then because ours is not that much, we can easily spot even this one. I'm sure some people will still be seeing it as the same. So in order not to make that mistake, we just input our formula there. You get it? We just input our formula there. So if we want to make it a bit more fancy, we can apply conditional formatting over here. Let me show you something. Do you guys know about conditional formatting? So that what we can do is that if it is true, it will show us green. If it is false, it will show us red. Should I teach you? I should give it to you as assignment. Priscilla, which one do you prefer?
Please teach us.
Okay, then I'll give it to you as assignment. Isn't that what you said?
No.
Oh, that's what I heard. Oh.
Sir,
No,
no
that's not the
student likes
question.
an assignment.
You know, no teacher too likes to be teaching. All teachers like assignments. Yeah, I'm going to do it. If it works, fine. If it doesn't work, you guys are in trouble.
Please, like when are we getting there? What's the name? The recording, because I got lost on the way, so like I want to
Hey,
follow.
who got lost? Bless.
Yes, please. At the
That's
end.
when you get the recording.
Yeah.
Oh, and after the I usually get the recording. Haven't you been getting the recording so far?
Yeah, yeah. Well,
So don't worry,
okay.
you get
Maybe
it
to do
soon.
it to my network is messing up.
Hey, no problem. No problem. You get a recording. So I'll give you guys the conditional formatting as assignment. That's what Priscilla said. So she is giving you the assignment.
I didn't say that, please.
Oh, that's what I heard. Oh, that's what I heard. So I want us to see if we can do something about amortization schedule before we close. If not for that one, I would have showed you the conditional formatting. Do you guys know of amortization schedule?
Yes, please.
What's it about?
It's about repayment of loan.
So have you prepared an amortization schedule before?
Yes, please.
Okay.
It was part
So
of
let me show
the
you one and then let me see if I can. You
the
can.
courses we did last academic year.
Oh, okay, okay. So you can prepare one with pen and paper, right?
Yes, sir.
Did you know you could do it with Excel?
Okay, knowing what Excel can do, I know it's possible.
Now you know it's possible. Okay, I'm coming. I'm trying to locate the file. Okay, guys. So I can't find my worksheet with the amortization schedule. And it's past 11 now, so we may have to close and then pick it up next week. Are we okay with that?
Yes, please.
Yes,
Okay. So we'll be expecting an assignment this maybe today or tomorrow. Let me even give you a hint of what the assignment will be. That's one of the things you'll be required to do is to format the cash flow statements properly. I mean, we can all agree that some things have been left out. Our admin expenses like this is not well formatted. So you guys will be required to format it nicely. Okay. And then let me even explain to you before I okay. So let's say that will be one part of it, the cash flow statement. For the other things that I want you to do, I'm not yet certain about it for now. So when I'm certain, I'll let you know. But know that you'll be required to format the cash flow statement. So you can even start doing that now before I upload the actual assignments on the Google Classroom. Okay, so in the absence of any other question, I would like to bring today's class to an end. Those of you who usually get lost, are you all found? Or you are waiting for the recording? You're waiting for the recording? Okay. We hope and pray the recording will help you get back on track. Okay, so if there's nothing else, I think we can end it for today. So I'll see. I don't know if we are going to meet next week or maybe the following year because of the Christmas break. You guys know there's a Christmas break, right? Next week is 24th. So it's likely we may not meet next week, but rather that should be the following week to be 31st. Or you guys want to meet next week? You want us to meet next week? I'm not hearing anything on.
Yes.
Okay. So you will discuss it with Mark Moss and see. Okay, so if there's nothing else, we can end for today and then we'll continue next week or whenever. Mark Mills, are you online? Okay, so
Yeah, I'm here, but then we'll discuss that and then give them a feedback.